Hello everyone, welcome to Options with Doug, streaming live daily on Bookmap Discord and the Bookmap YouTube channel at 1:30 p.m. Eastern Time. Before I get started, I need to go through the disclosures. General disclosure. All Bookmap Ltd materials, information, and presentations are for educational purposes only and should not be considered specific investment advice nor recommendations. Risk disclosure. Trading futures, equities, and options involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Here's my contact information. The best way to get in touch with me is through Discord. My name on Discord is Doug P. Also in Bookmap Discord, there's an Options-Doug chat channel. That's a great place to post questions, comments, and content related to the topics of my presentation and the topics of the channel, which I'll go through in just a moment. And note that Bookmap Discord is free and available to everyone, whether you have a Bookmap subscription or not. There's a lot of great content there. All right, I'm also on X, formerly known as Twitter. My name there is @DougPless. The focus of my presentation today and the focus of the Options-Doug chat channel is options order flow, the impact of options markets on stocks and futures, and the influence of market maker hedging flow on price action. I have a two-step process for trading, and the first is planning, and I use positional analysis. I look at how traders and market makers are positioned in the options market and how those positions change from day to day to develop a thesis regarding the expected trading range and volatility for the day, as well as a directional bias. And the second step of my process is execution. I look at real-time order flow in Bookmap and real-time market maker hedging flow in Spotgamma Hero to confirm my thesis and for setups for entries and exits. And when I talk about setups today, I will be talking about setups in an underlying asset. And those setups can be taken any number of ways. For example, the S&P 500 setups can be taken with ES futures, SPY shares, SPY options, SPX options, or even ES options. Questions and comments are welcome, and I will be watching both the chat in the Options-Doug chat channel in Discord, and also the chat in YouTube for your questions and comments. Please feel free to post, and I will do my best to answer your questions. And hello, Floyd's Garage. Welcome. Glad you're here. Also, hello, Don. Welcome. Good afternoon to you. Well, glad you're here. All right. My agenda for today, Friday, November 17th. First of all, I want to go over news items, economic data, and events for today. Then I'll go through my positional analysis. Then I'll review some setups from earlier today, and then I'll take a look at the live market. And all right, so let's get started with news. Obviously, the big news for today, a big event, is the monthly options expiration. Let's take a look at that. What this chart is showing is the delta notional. It's the expiration concentration chart for the S&P 500, Nasdaq, and Russell 2000, all combined into one chart. This is showing delta notional on the vertical axis and the different expirations on the horizontal axis. This is the November monthly expiration, and this is the December expiration. You can see it's much larger. That's pretty typical of the quarterly, monthly options expirations. All right, let's take a look at November. So what this is showing is call delta with the orange bars and blue delta with the blue bars. It's very obvious that this is a very call-dominated options expiration. These calls have been stabilizing the market in a positive gamma environment, and the expectation is as those calls expire that some of that stabilizing force of that positive gamma will be gone, and that could lead to greater volatility. And typically there's a little bit of a move down after a call dominated options expiration. Excuse me. So looking for some weakness or consolidation next week. And that may or may not happen. It depends on traders. This is a very bullish time of year. So we'll just see how that plays out on Monday. All right, so again, very call dominated positive gamma options expiration. The typical expectation is for a little bit of a consolidation or slight move lower after expiration. All right, let's start with positional analysis now. I'm going to go to the S&P 500. This is the ES futures and Bookmap. Before I take a closer look at this chart, I want to take a look at a larger time frame. I'm going to go to the SPX. This is a 30-day 1-hour chart. Let me point out the key turning points on this chart. I'll start with this Monday, October 30th. This was what happened over the weekend. Traders were buying a lot of puts, concerned about weekend risk. And on Monday, price started moving higher, implied volatility drops, those puts lost value, market makers could buy back short hedges, and that led to a huge put Vanna rally. So at this point on October 30th, the market was very put dominated, negative gamma, and gradually shifted towards a positive gamma environment. Then this is Friday, November 10th, Magnificent 7 rally. Then also fueled by the CPI report on Tuesday that was much better than expected. And now it looks like prices, the SPX is consolidating for the last 3 days. Typical of a positive gamma call dominated options expiration, and again that may loosen up a little bit next week, meaning implied volatility may increase next week. All right, so those are the key turning points. Let me point out the levels on this chart. First of all, the dashed purple lines are showing the lower and upper weekly expected move, and these are updated once a week. SPX trading well above the upper weekly expected move. The dashed blue lines are showing the lower and upper daily expected move, and so far SPX is trading inside of that range. That was plus or minus 26 points today. Both of these are based on the options market. Weekly expected move is updated once a week over the weekend, and then I update the daily expected move every day. All right, the dashed red lines are showing these Spotgamma levels. These are proprietary Spotgamma levels available to Spotgamma subscribers in a variety of platforms. This is Thinkorswim. Let me point out the key daily levels. First of all, here's the put wall. That's at 4,200. That's the strike with the largest net negative gamma that can be expected to act as support. Not in play for today. And the next level up is the volatility trigger at 44.15. That is Spotgamma's proprietary volatility flip level. Below that level, market makers' position on the gamma curve is negative. In a negative gamma environment, market makers have to trade with price to hedge their delta exposure, and that tends to enhance or increase volatility. On the other hand, like SPX is trading now, above that level, market makers' position on the gamma curve is positive. In a positive gamma environment, market makers have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility. All right, the next level up is 4,500. That's the absolute gamma strike. That's the strike with the largest absolute positive and negative gamma. That's where most of the gamma weighted open interest is concentrated. That level did act as support earlier today. And then finally, the last key daily level is the call wall, and that's up above at 45.50. And that's the strike with the largest net positive gamma that can be expected to act as resistance. And note that level did move up from yesterday. It moved up from 4,500 to 45.50. So that's bullish. That call wall, that potential ceiling for price has been moving higher, now at 45.50. All right, there was one other shift in levels for the SPX. The volatility trigger did move down 5 points, really not significant. So the most significant shift higher for SPX was the call wall moving higher. All right, I know this is current price is obscured with all this information here. So let's take a look at a 1-day chart, or actually 3 days worth of data here in a 1-minute chart, so we can see the levels that are in play for today. Actually, let me zoom in on this just a little bit. All right, so that's 3 days worth of data, the dark areas. So here's that 4,500 level. SPX 4,500 absolute gamma strike acting as support. And for a long time today, we'll see in just a moment in Bookmap that price was pinning to the SPY 450 level, now moving higher. All right, the next level up is this combo L3 level at 45.22. All right, let's go to Bookmap now. So in Bookmap, I have my own cloud notes. So I can show SPX levels and SPY levels, any other levels I want, all on one chart. So this is that 4,500 level, SPX 4,500, absolute gamma strike, acting as support. That was noted as a support level in the Spotgamma AM Founders note. Did its job almost to the tick. Actually, to the tick. This is the SPX shown in an ES chart, and there is a price difference between ES and SPX. It's somewhere between 13 and 14. So I'd use 13 today. That may be a little bit low. So that that white line, that 4,500 level, should be up a little bit higher. So that 4,500 level did act as support. And then this is the SPY 450 absolute gamma strike. And note how price was concentrated, oscillating up and down around that level for quite a bit today, until it finally broke out around noon, broke above that level. You can still see that this is the area with the highest amount of volume. That's the session volume profile, showing volume since the beginning of the session. And my session begins at the open yesterday, so at 6 p.m. Eastern Time. And no point of control shown by this purple line is right below that level. And I did post a couple of charts in Bookmap earlier today, one for the ES and one for NQ. We'll take a look at NQ in a minute. All right, so those are levels in play for today, both SPX and SPY levels. Also note the quick drop started right before the cash open, and then the 450 level caught that. Now it looks like the SPY 451 level may be acting as resistance. You can see the liquidity in the order book here earlier. It looks like traders did consume that. Maybe some of it was pulled. Those are resting limit orders, above price limit orders to sell. All right, let's take a look at Nasdaq now. And by the way, one other thing just to point out, that if there was going to be a drop from 450, it looked like that may happen around, might have happened around 11, but this 4,500 level was there to catch it. So for price to move lower, it would have to move lower than the 450 level and the 4,500 level. All right, let's go to Nasdaq now. Whoops. This is the NQ futures and Bookmap. Very similar chart to the ES. Before I take a closer look at this chart, I just want to take a look at an NQ chart first, so we can isolate the QQQ levels in play. So 385 is the absolute gamma strike for QQQ. Very similar to the S&P 500 that was oscillating up and down around the SPY 450 absolute gamma strike. This morning, the Nasdaq was oscillating up and down around the QQQ 385 absolute gamma strike. Price broke higher, found resistance at 386, then support just above this combo level. All right, let's take a look at NDX now. NDX, this is 3 days worth of data. There's a combo level just right around the QQQ 385 level. Then here's that combo level up above. Combo levels combine, in this case, QQQ and NDX, gamma weighted open interest into one level that's converted to an equivalent NDX price. Let's go back to NQ. So I have my own cloud notes in NQ as well, so I can show NDX levels, QQQ levels. There's the 385 level. Scrunch this just a little bit. So what was happening this morning? Let me zoom in on this. This was making for a pretty interesting range-bound trade. Here's the upper weekly expected move, acting as support, and then VWAP acting as resistance with a slight bearish tilt, making a series of slightly lower highs, slightly lower lows, but multiple trading opportunities from the upper weekly expected move to VWAP to back down, up and down. So if that's the kind of trade you like, that was a pretty interesting setup, that multiple up and down range trade between, again, VWAP and the upper weekly expected move. All right, so those are the levels in play for Nasdaq. All right, let's take a look at gamma notional now to see how market makers were positioned on the gamma curve at the beginning of the day. This is gamma notional. This is what I'm looking at for the S&P 500, Nasdaq, and Russell 2000. First of all, for the S&P 500, both these numbers are positive for SPX and SPY. This indicates for an index that traders are short calls, market makers are long calls, and in a positive gamma environment, when they're long calls, they have to trade against price to hedge their delta exposure, and that tends to subdue or decrease volatility, leads to more range-bound trade and pinning. All right, for the Nasdaq, both the NDX, QQQ, NDX is really not significant. NDX and QQQ, both positive, but less positive than yesterday. And then finally, the Russell 2000 shifted back to negative, from positive yesterday to negative today. So slightly negative gamma for the Russell 2000. All right, let's take a look at the Vanna model now to get a graphical representation of what this means. So I want to go through the Vanna models, and then we'll take a look at the absolute gamma charts for today. So first of all, the Vanna model. What this chart is showing is market makers' delta notional. This is their delta exposure. On the vertical axis, spot price for SPX. On the horizontal axis, there are two curves on this chart. The first, the light gray curve, shows how market makers' delta notional changes with changes in price only. The purple curve adds implied volatility to the equation, showing how market makers' delta notional changes with changes in price and implied volatility. And that's the curve that we want to take a look at. All right, so let's check on price for now, right now. SPX trading right around 45.14. So that's right around here, right at the bottom of the curve between these two lines. So at this point, there's really no Vanna headwind or tailwind as price moves in a narrow range. If price continues higher, market makers' delta notional will start to increase, and they will have to sell futures to hedge their delta exposure. That's typical on a positive gamma environment. Market makers trading against price to hedge their delta exposure. And if price falls, they can buy back their short hedges. Or they can sell their long hedges. All right, so they're trading against price either way in this positive gamma environment. I'm sorry, I said it right first time. So as price moves up, they have to sell futures. They're trading against price. Price drops, they can buy back their short futures. All right, so that is SPX. We'll take a quick look at SPY. SPY trading right around 451. Also near the bottom of the curve. If price continues to increase, market makers will have to sell futures to hedge their delta exposure. Price drops, they can buy them back. And note this curve with the skew, kind of the V-shaped curve, is very typical of a positive gamma environment. Let's take a look at QQQ. Trading right around 386. Also near the bottom of the curve. All right, let's go back to SPX. What I want to point out is this absolute gamma. What this chart is showing is gamma on the vertical axis, strike price on the horizontal axis. This is the 4,500 strike. And that is very obviously the strike with the largest absolute positive and negative gamma. Call gamma shown with the orange line above the zero line. Put gamma shown below the zero line with the blue bar. As price moves up above that level in a positive gamma environment, market makers will need to sell futures. Price moves below that level, market makers will need to buy futures. That can lead to a pinning effect around these levels. So that's why the 4,500 level is so important. That may change next week as some of this gamma expires and traders position themselves for the next expiration, position themselves for the end of the year. Let's take a look at SPY. SPY, there's the 450 level. Again, obviously the level with the highest amount of put and call gamma. Note here there's more call gamma than put gamma. Let's take a look at QQQ. And there's the 385 level. So those are levels that I was talking about in my post in Discord this morning. All right, let's take a look at some setups now. So first of all, my thesis for the day was looking for lower volatility range day. All right, so let's take a look at some setups for today. I'm going to start with the S&P 500. This is the hero signal. I want to see what options traders have been doing today. So everything that I've looked at so far today, other than the Bookmap charts, has been static data. This is based on open interest that's updated once a day, sometime during the night. Spotgamma applies their own proprietary algorithms to these levels to come up with their levels. So again, that is all static data. It is updated once a day. It's available to subscribers sometime in the morning or early in the morning. I use it in my preparation before the market opens. All right, so this is the, let me back out. This is the hero signal for the S&P 500. What this chart is showing is price for SPX with the white line and the hero signal, hedging impact real-time options. What that shows is options trades and market maker hedging activity for a combined signal of SPX, SPY, XSP, and ES futures. And a rising line indicates traders are taking positive delta positions. A falling line indicates traders are taking negative delta positions. So the direction of line is in terms of delta. All right, let's zoom in on this chart now. So really in the morning there was no, not much clarity with that pinning around 450, the test of SPX 4,500, and then right around 1145 traders started taking positive delta positions and price responded higher. Maybe that was after the European close. All right, let's see what they were doing. So when you separate out puts and calls, calls shown by the orange line, puts shown by the blue line. Falling blue line indicates they're buying puts. That activity stopped about 11:45. They were also selling calls. That activity also stopped, so they started buying calls. So right around 11:45, they stopped buying puts, started buying calls, and price responded higher. So when traders buy calls, market makers sell the calls, and they have to buy futures to hedge their delta exposure. Let's go take a look at Bookmap. Go back to ES. So we know around 11:45, traders started taking positive delta positions. And before that, price for ES was making a series of higher lows and then right around noon broke out of this wedge pattern. The volume dots are showing market buy minus sell. Magenta dots indicate more sellers than buyers. It's a delta. And then the green volume dots indicate more buyers than sellers. So price broke out right around noon as traders started buying calls, stopped buying puts, and did a retest, not quite to the 450 level, secondary entry point. And now the S&P 500 continues to move higher. Looks like it's broken above the SPY 451 level and maybe heading to a couple of combo levels up above. Not much liquidity at those levels. There's a little bit at 45.22. Let's go back to Hero. All right, so Hero continues to trend higher. Traders continue to take positive delta positions. And again, they're buying calls. So call buyers more aggressive than the put buyers in this afternoon. All right, so that's the S&P 500. Really not much to do, or not, I just sat on my hands, looked at other things during the morning session. All right, let's take a look at Nasdaq. Interesting Hero chart here. So this chart is showing a combined signal for NDX QQQ. QQQ typically makes up the most of that notional value. So the Hero signal was pretty much flatline to about 11:45. Started to tick up. Looks like price started moving higher before that. We'll separate out puts and calls. So right around 12:05, they started buying calls. There's another signal that's very relevant for the S&P 500. This is the Magnificent 7. Usually a better indicator, actually. And it certainly has been today. So what this chart is showing is a combined signal for these stocks known as the Magnificent 7. Apple, Amazon, Google, Meta, Microsoft, Nvidia, and Tesla. Let's zoom in on this chart. So there's a very, very strong correlation between options trades, market maker hedging activity, and price action for these 7 stocks. Hero starts ticking higher just after 11:05, something like that. That's about when the Nasdaq started moving. We'll go back and check that. So pretty much since around, well, really almost from the open, 9:40, traders have been selling puts. Very interesting. That's shown by the rising blue line. Then when price really started to move higher around 11:05, that's when traders started buying calls. Spotgamma has noted that this signal where both lines, the put and call line, are moving in the same direction is a very powerful directional indicator. Really hard for whatever instrument you're looking at to fight this when traders are buying calls and selling puts. That's a very good signal that price is going to move higher. So really it often helps to separate out puts and calls to see the total signal. And also take a look at this Magnificent Seven, whether you're trading, especially for trading Nasdaq, but also for the S&P 500. All right, so those are the setups for the S&P 500 and Nasdaq. All confirmed with options trades. All right, let's take a look at Nasdaq and Bookmap. So we know that Magnificent Seven stocks, Hero, started moving higher right around 11:05. And that's about when Nasdaq started to move higher. We'll go back and take a look at Bookmap in just a moment. Even though the Hero signal for the Nasdaq didn't start ticking higher until about 30 minutes later. All right, let's go to Bookmap. Go to Nasdaq. All right, here's when, let's actually zoom in on this a little bit, 11:05. This is when traders started taking positive delta positions in the Magnificent Seven. That's the final test of the upper weekly expected move. You can see the shift in order flow, magenta volume dots on the way down. Aggressive buyers start to come in. Some chop, final chop around the 385 level. Price moves higher, finds resistance at 386. Comes back down for a nice pullback entry final test. Somewhere between VWAP and 385. Now continues to move higher. 386 was resistance, now support, and moving up to the 387 level. All right, that's the S&P 500 and Nasdaq. Took quite a while for price to move out of that consolidation for both. So if you were patient, finally good long entries for especially Nasdaq, but S&P 500 also. All right, let's take a look at some stocks. And I posted this morning. I'm going to go to Equity Hub for and show my watch list. And what I was looking at is this next expiry gamma percent and the date. So what this is showing, this is the amount of gamma that's expiring, and this is the date today, and that's typical of a monthly expiration. a lot of stocks will have the largest amount of gamma expiring on the Friday of monthly options expiration. I want to go to, I'm just going to take a look at one of these. Actually, we'll take a look at a couple of these charts. So earlier, NVIDIA was, still not ranking it correctly. All right, there. So NVIDIA at the top of this chart, this is the composite hue showing an area of call domination with green, an area of put domination with red. These lighter shades indicate smaller position size, but note the call domination above the call wall. Let's just check on that level at the 630 strike. Let's just take a look at one other stock. Take a look at AMD. So the darker colors indicate a larger position size, and for AMD, call domination above the 120 call wall key gamma strike. And I like to focus on any stock with greater or close to greater than 30% of gamma expiring. That's what Spotgamma's talked about. All right, so we're going to go through these stocks pretty quickly. Let's start with, let's go to Hero. We'll go to NVIDIA first. We'll just go in the order of the list. So what I'm looking for in this case is a call gamma unwind. What that means is traders have been buying calls, hence those areas of call domination. Traders buy calls, market makers sell the calls. They have to buy stock to hedge their delta exposure. As expiration approaches, those calls start to lose value. They lose delta due to charm. That's the change in delta as expiration approaches with the change in time. And market makers can sell their long stock hedges if traders are not continuing to buy calls today, and that could be the case. So we'll just go through these stocks. When I took a look earlier today, there were about 4 out of 8 that were showing a decent call gamma unwind. So 50% level, 50% hit level. So let's take a look now. First stock on the list, NVIDIA. And earlier today, there was a little bit of there was a move down, and now NVIDIA is recovering right around the same time as we saw on the Nasdaq. So let's go to Bookmap, and we'll just go through these stocks. And sometimes this can happen on Monday. So move lower in the morning. It looked like there was going to be a call gamma unwind here, and then around 11:05 traders started buying calls and price moved back higher with the Magnificent Seven. All right, so that's NVIDIA. The next, AMD. Go back to Hero. Take a look at AMD. So prices moved up and down around this 120 level all week. Call wall, key gamma strike. And AMD, no call gamma unwind for you. Separate out puts and calls. So today traders have been selling puts, shown by the rising blue line, and up until about noon they were buying calls. This may be more clear with the total signal. Sorry about that, nothing I did. So bigger move up in the morning. Whoops, wrong tool. Bigger move up in the morning, typical pattern. Options traders take the foot off the gas, price slows down, consolidates. Let's go to Bookmap. Remember 120 is the call wall key gamma strike. Mostly aggressive buyers in here, shown by the green volume dots. No call gamma unwind for you. The next on the list, Netflix. And Floyd's Garage asks, call gamma unwind is for SPX? Could be. That's what I talked about earlier today in a call dominated expiration. Those calls that have been stabilizing the market can expire, and that leads to some decreased stability, more volatility, and potential for consolidation or a move lower after a call dominated expiration. All right, so Netflix opening print at around 467, price still trading below that level. Let's go take a look at Hero for Netflix. Not really much of a call gamma unwind. Next, Meta. All right, traders continue to buy calls. That started to accelerate on the last 30 minutes or so. Traders aggressively buying calls into the close. They've also been selling puts, shown by the slight positive notion of value of the blue line. Here's Meta. So another bullish day in Meta. No call gamma unwind. Next, Tesla. Bullish day in Tesla. See what options traders are doing. So selling puts and buying calls. Looks like put sellers are having a stronger influence on price. Sorry about that. Next, Microsoft. A little bit of a call gamma unwind early in the morning, but Microsoft reversed higher with the other Mag 7 stocks. Let's go over to Bookmap. Microsoft. So initial call gamma unwind earlier today. Oops. Price recovers 1105. Now continues to move higher. Next, Amazon. No call gamma unwind there. Take a look at Hero. So traders are buying calls shown by the rising orange line. They're actually buying puts. Call buyers more aggressive, having a stronger influence on price. All right, the last on the list was Google. So initially a little bit of a move lower in Google. And now traders are taking positive delta positions around the same time as everything else. They started buying calls. They've also been buying puts. Notion value for both pretty small. Let's go take a look at Bookmap. And for Google, the amount of gamma expiring was just a little bit less than 30%. I think there might have been some news about Google. All right, so really not much of a call gamma unwind today in this very bullish environment. That may happen on Monday. We'll see. We'll talk about it on Monday. All right, does anyone have any stocks they want me to take a look at? I'll be glad to take a look at anything you want me to. Otherwise, we'll go back and take a look at the S&P 500 first, then Nasdaq. Very nice uptrend to this trend line. We'll see what options traders are doing now on the S&P 500. So far they continue to take positive delta positions. Looks like that may be leveling off a little bit. Separate out puts and calls. All right, so they continue to buy calls. Let's take a look at one other thing. We can take a look at this next expiry. So these are options that expire today. So earlier today, that was making up a larger portion of the total notional value. And then that really separated about 12:30. Wrong tool. Separated about 12:30, where traders started taking positions, buying calls in longer dated expirations. So the green line is showing the 0 DTE for SPX, SPY, ESXSP. All those instruments have options that expire every day. So this is showing, again, for the S&P 500, options that expire today. And the green line, the purple line, is showing options that expire further out in time. Longer term positions. So that notional value for the purple line, all expirations, is much higher than the notional value for the 0 DTE trades. Let's go back to Bookmap. All right, let's check Nasdaq. Another nice steady uptrend. Let's see what options traders are doing. We'll do a quick check of Nasdaq, then we'll go to the Magnificent Seven. All right, for Nasdaq, heroes leveling off. Options traders taking their foot off the gas. Same for the Mag 7. So it looks like resistance at this 387 level. Let's separate out that a little bit. So there's a combo level just above that. That NDX, that's in terms of NDX price. So a combo level just above the QQQ 387 level. All right, just a quick note about next week. I believe the FOMC minutes, I'll talk more about the week on Monday, the upcoming week. But just a quick reminder now, I believe FOMC minutes do come out. I believe that that's typically on a Wednesday, 3 weeks after the FOMC meeting and announcement. And then in the United States, Thanksgiving holiday is next week. That's Thursday and Friday. Thursday, everything is closed. And then I think there is a half day market day on Thursday. I will not be streaming on Thursday or Friday. So I will be traveling both those days. I will be in chat on Friday, probably Friday afternoon sometime. I'll be available in chat. But not streaming. So no streaming next week on Thursday and Friday. I will be here on Monday through Wednesday. Go back to the S&P 500, very slow day. So question is now, will this uptrend trend line continue? It looks like 451 would need to act as support for that to happen. Let's take one last look at Hero, see what options traders are doing. All right, so for the moment, Hero has shifted lower. All right, separating out puts and calls, we can see that now it looks like traders have stopped buying calls, maybe started selling calls, started buying puts again. Take one last look at Bookmap. All right, that's it. Again, the question remains, will 451 act as support? Will price continue higher? All right, my time is up. I want to thank everyone for watching. Have a great weekend, and I will see you on Monday. Thanks again. Bye. And thank you, Take Profit. Have a good holiday to yourself.